Why is CBDC becoming an important component? I mean, couldn't we just do this without CBDC?
Yeah, well, just think about how do we do it today. So I'm even skipping a few steps, but when you invest in an asset, you purchase an asset, there has to be a messaging on the back end that coordinates your finances, so the pool of cash or the money that you're going to pay for that asset. The asset has to go to a transfer agent, and then goes to the custody, the broker. There's a variety of steps that have to happen, and on the back end, the financial exchange, also there's several steps that happen that make sure that we're actually drawing on the right pool of money to pay for it, and that there's confirmations along the way that that money was transferred, and there's messaging between the different banks to say that we've received it, and therefore we can now, in exchange, message back that the bond or stock you're buying gets handed over. Now, the reason why we cannot fully do that with the existing system, or what we can do with a CBDC or a stablecoin, is that all these steps, there has to be money that exchanges at the same time in the same language. So the computers have to be able to speak to each other. The code has to be interoperable or harmonized, and we cannot do it with our existing system. So yes, we could theoretically have a digital bond, but then the digital bond will still have to wait for all the back-end messaging and transferring of the money with our existing system. So this is now where digital currency comes in, where you basically have it all blockchain, it's all coded in a similar format, and therefore you exchange directly the bond for the money. And for that, you need money. You need blockchain money. And there's probably even more forms, but there's two very credible forms of blockchain money that are basically the settlement currency, the currency needed to make all these transactions happen and enable them. And it's either a CBDC, so central bank money, or it's private money, which right now, stable coins are the best form of private money because they're backed fully by collateral that everyone trusts and understands indirectly.
Mm-hmm.
But what you need blockchain-based money to do that. And that starts to open up everything, because then you get this whole seamless process on the blockchain itself, and you don't need all the fingers in the pie, because you can have direct trading between $1 worth of token of either central bank money or stable coins, equivalent to $1 of the bond or the stock that you wish to purchase.
In order for that to happen, the tomorrow picture, the tomorrow that you just talked about, everything has to be operating through this quote unquote blockchain system to bring the kind of efficiency you're talking about. Is that right?
Yes and no. I mean, in principle, where you're right is this only works when you create the network effect of entire markets moving to it.
Right.
Individuals, obviously, it's not as beneficial. But you don't necessarily need all securities in the world. It just could be the securities that really benefit from this. For example, equity market is actually already fairly liquid and fairly efficient.
Yeah.
The blockchain version of equity trading delivers some marginal gains, but they're not huge. But fixed income, it's very different. The fixed income market is still very fragmented. It's still very much, a lot of it runs on over-the-counter, less exchange-based. There, the nature of fixed income with coupon payments and rates built into individual bonds, with bonds having different maturities and different investor profiles, that's where you get the efficiency gains can actually be huge. So, but you're right. Ultimately, as an asset class as a whole, the entire network has to go with it. But it doesn't necessarily mean all assets everywhere at all the time. It could just be certain segments of a market. But the market as a whole has to go for the gains to really be present.